Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, inflation numbers came out this week. Don't believe the hype. The worst of all possible worlds is upon us. Let us explain in this video and what you can do about it. Let's dive in.
Trade Genius.
Hey everybody, Bob, Trade Genius here. Peace, love, and Trade Genius. Spring into some savings with us right now. We got some great specials running. Market is in unprecedented areas right now. We think we got a good handle on it. Go to tradelikeagenius.com. Take advantage of our spring specials. Thanks for listening. See you later.
All right, Bob. So the PCE numbers came in, what was it, yesterday or Thursday? And the market really had a positive reaction to it. And the headlines that came out were like, okay, you know, the numbers seem to be in line unless you looked closely. And I'll let you explain it. But it's funny how they try to spin things for a certain narrative to get their whatever goals they want to get done accomplished.
Yeah, I mean, look, they're begging Jerome Powell to cut interest rates. And so they're trying to do everything they possibly can. You know, they've been fudging the unemployment report by making part-time jobs seem like full-time jobs. And now they're fudging the CPI PCE report to make it look like core's coming down. But really, in fact, if you throw this chart up here, super core is going up. And you know how I know we're right and they're wrong? Is because this week Bitcoin decided to go on a tear. Oil's over $80. Natural gas is getting a bid. Uranium's getting a bid. And the whole commodity space is starting to light up. And because everybody's gearing up for this word, it hasn't been used in 50 years. It's called stagflation. Or what I think people are really going to feel, because it's going to be a little bit different than the stagflation in the past, is we're going to get what I would call an inflationary depression. And let me explain the difference, Phil. Stagflation of the 70s is my dad kept getting raises all the time, and it caused the inflation rate to come up that way. This time with AI, we're just reading articles of guys in our room, a whole department got wiped out being replaced by AI. And I think you're just seeing it across the board. Very deflationary for people's incomes, but the things that you need are staying elevated. And no accident. Look at BGS Food, up 25%. The food stocks are undervalued to food inflation. The oil stocks are undervalued for oil inflation. Natural gas is undervalued with nat gas inflation. So everybody's figuring this out, Phil, and I think it's going to be this big move to commodities. We've been talking about this for the last couple of months. We are extremely well positioned in this area, and we're having an awesome day. And if you're going to get a move higher here in Bitcoin, if it breaks the overnight high, Phil, and that measured move for this bull flag right now could take it to 72K, the Bitcoin miners are going to go, because people are going to be starting to factor in, hey, is this thing really going to get to 100K? And we have a new bubble on our hand. The Bitcoin miners are going to start to really race.
Yeah, no, I agree. Now, it's Bitcoin and there's volatility, so we could have some quick dips, between here and there. But I think all dips at this point, especially if they're the quick variety, and that happens with Bitcoin. It's a highly levered product and it's in a liquid instrument. So we're up here at 62 and change. If it has a quick dip next week down to 58, that's pretty normal, even though it might be a $4,000 or $5,000 drop. The key would be to watch how quickly that recovers. So I agree with Bob. Overall, I think Bitcoin's basically a good proxy for the inflation. And if you look at these numbers too, though, I mean, it's just, they're not winning the battle. Here's the breakdown of them, and I thought it was hilarious that the initial, because we watched the headlines when they come out, and the initial headlines was like, oh, yay, inflation isn't going back up. And then there were some secondary looks at it that came out, which none of the mainstream media really talked about, but it was that 3-month and that 6-month change, which you guys can see on this chart, just went absolutely bonkers. I don't even know if we've had a rate of change that high, even over a 3-month and a 6-month period. So I don't see how there's any possible chance the Fed is going to cut not only this next one, but even the one in June, right? They got a cut meeting this month, and they got the next one I think is in June, Bob. I don't see it. It'd be one thing if this was doing this the other way. Then I could say even maybe this month they might cut, or possibly even June, because they don't want the deflationary spiral to accelerate, right? They're scared of that just as much as they're scared of this. But I think this cancels out June.
Yeah, I look, I don't know who said it, but somebody said we may not get any rate cuts this year at all.
Right.
And I'm starting to, my initial thing was I thought June for sure we would get a cut, maybe March, but they lost the curve on this. And I think now with oil back up over $80 a barrel, and we're going to get a pump in that gas here. And food prices are not going down. And you know what's interesting, Phil, is the largest almond grower in California just filed for bankruptcy, and the largest peach grower in California filed for bankruptcy. Now, there's stories behind it because they were private equity deals. Private equity is scourge of the earth. They're the freaking Borg. But that means they're not getting prices at the farmer level. You know, and this is reminiscent of the Great Depression. This is what led up to it. The farmers weren't getting their prices, but the prices at the grocery store were accelerating. So it's the parasites in the middle that are taking away all the profit, and eventually just eats its way backwards and corrodes the whole system. But I thought that was pretty wild. 2 of them in the last 2 months. And, you know, if the commodities at the front end, you know, start to rise and catch up with the pricing, you know, they're just going to push all that into the retailer, and you know, we're going to really start to eat it. It's going to be really scary.
Yeah, and look at their core services, right? That's the main one, ex-housing core service. I mean, that's one of the hottest line items. It is the hottest line item. So, yeah, I agree. This whole cut mania thing and what the market wants to price in is just, I don't see it. The only reason why I think we ever see a cut is going to be structural weakness in the stock market, and that will be deflationary in and of itself. And I honestly think that's kind of what the Fed's like banking on now. They're like, please have a pullback, you know, because our efforts are futile.
Yeah, I don't know what it is, man. This is the problem. You know, you have AI is fighting a human, right? So these AIs know their algorithms, they're heartless. They have a target now. They're doing all the math. Then you got 12 guys sitting in the room trying to act political, and the math is winning. So yeah, it's going to be really scary. But I totally agree with you, Phil. I think what's going to happen here is that we're going to get that inflationary spike, just like we had in 2006, 2007. Mm-hmm. Real estate fell off in 2006. Commercials falling off now.
Right.
2007, which is right now, I think we get the commodity pump.
Right.
And then the whole thing goes down into a whirlpool. Don't know when. I don't care. I just want my energy names to fly here so we can then raise cash and sit back and eat popcorn here. But I think you might be right, Phil. You called the back half. You know, I thought we'd start selling before then.
You know, it's just a kind of a textbook setup for a blow-off type of move, you know, and that's all it is. It's kind of like that final wave if you look at just kind of the market structure. And really, for me, it was the 3-year consolidation on the yearly chart, right, of the S&P 500. And, you know, the odds of us having a pretty substantial breakout on such a large index like that and such a long consolidation, that is why I kind of lean that way. But it's so counterintuitive because you're going to get that right into the teeth of when all of this comes to a head. And, you know, the job claims are starting to pick up, unemployment's got a rounded bottom. We showed that chart, right? That's a huge red flag for the next 6 months for jobs. You know, so I think you have a number of things. You got commercial real estate, like you said. All this stuff usually comes together. It's funny how that works, but the cycle usually all comes together to a head. And just when, you know, and like Jamie Dimon, love him or hate him, but, you know, he commented the other week, markets do great until they don't, meaning that they will change on a dime. And I think that's what's probably going to happen when you're just going to turn around in a couple week period and be like, gee, looks like we put in a high, you know, and you're going to have the dip buyers coming in and they're going to fail and fail and fail trying to buy these dips. And then all of a sudden it's going to become apparent when you're down 20% from the all-time highs that, oh, we might be in a bear market, and then the data's starting to look really bad at that point. So the trick is to identify when that's, or if that's coming, and then when it starts to turn, right? That's the magic. So, you know, that's what we're really keying in on here. But in the meantime, don't fight the trend, right?
Yeah, and maybe we'll talk tomorrow. I think there's going to be a big bank takeover this weekend. That'll start getting in front of people's eyesights again as well. So, but anyway, you guys get the point. You know, I think it's commodities turn. Buy things that are rare, that cost money to make, and sell things that don't. And I think you're going to be happy here the next 60 days. So with that, Phil, thanks for listening, guys. Come check out our service, tradelikeagenius.com. You know, we had a great day. We put some people in some really nice trades this week, and what we charge for service is nothing to what you get out of it. Check us out, tradelikeagenius.com. Phil, thank you as always, and we'll see you guys tomorrow.
Trade Genius.